Hello guys, welcome to the channel. Today I'm going to show you how you can make money from stock market. I'm not talking about crazy amounts, but I'm talking about safe and simple investments that can make you money over time. So I know this is a programming channel, but I thought I would share some ideas about financial well-being in case you don't have a job and if you have a job for betterment. So just a few things that everyone should know, nothing complicated about investing. So to visualize a stock, the health of a stock, this is a technique I use. There are multiple out there, but this is one I use. I mean, this is not a financial advice. Just go to your financial advisor and take confirmation before any investment or anything. But this is basically, you can consider it an observation that you can see for yourself and you know back test and just check out for yourself. Okay, so let's get ahead. First of all, you need to go into this tradingview.com. Here, if you log in, you'll see charts. So if I just open it for you once more, there we have a chart option. You can click on it and we'll just enter the chart. Let me close this one. Okay, it's the same thing. In here you can see these are indicators. Each of these represent one of the things on the screen. For example, this one represents this line. This line is the 200 exponential moving average. Then we have this one. This one represents the 50 moving average. 50 in the sense it is made with the last 50 candles. These are the candles on screen. If you do not know about candles, maybe you can check out another video, but these are called candles and 50 of them are used to create this line. Average of the 50 is used. It is some mathematical calculation that you don't need to get into the details of unless you're trying to build a software that involves this. But for now, let's just consider it something that is done mathematically. Then we have the 20 EMA, which is also a similar line, and then the 200 MA. This is the volume. If I hide it, you can see this below thing is gone. It is just a volume. You can ignore this for now until you understand. Let me just ignore it. This is moving average. This is not exponential. So what exponential does is it applies exponential weightage to the end of the if you are taking 200 exponential moving average, then the candles to the end, that is 1995, 1996, 7, 8, those will have exponentially higher value than the previous ones. And it is not immediately from 1995. It is a continuous increase in the weightage that is defined by some exponential formula. So basically what it means is it will give more weightage to the recent candles than the older ones. Okay, now that is done, and I don't want to get into those kind of technicals, but more into visual technicals. Now if you can see here, the stock was going down. It was going down for a long time, 2019 14 June to about October 2020. Then it started going up again. Now at this point, if you were an investor, how would you have known that the stock would have reached here? You could have known that. It's not something magical or future prediction. It's completely technical, and you could have known that. How? So you could have known that using these lines. You can see this 50 and 20 moving average, exponential moving average, crossed over the 200 moving average at this point of time. Okay, so by the way, this thing will apply to all kind of stocks. I just randomly opened some Indian company, but it will apply to every kind of stock, even Bitcoin and all, although they are more volatile and unpredictable, but ultimately over long term it will apply. So as you can see, this crossed over the 200 exponential moving average. Now if you see previously, it never did that. never did that. I will talk about this also, but just ignore this for now. But once it moved up, you can see that it started going up and it reached there. Now why did it stop there, by the way? Because it has reached the previous high. So once it reaches the previous high, that is here, close this. Once it reaches the previous high, it will face some resistance. So there's a chance that it will stop here. Anyway, we can learn about resistance in another video, but this is basically what you need to look for. Just apply this 50 and 20 EMA, and once they cross over this 200 EMA, then you can just start investing. Okay, and but you have to have patience. As you can see, it went up then went down again almost to the same point. Even if you had bought here, you would have been in loss, but if you have patience, it will ultimately go up. But of course, with patience, you need to be practical as well. If it is going down, that means it is going down, so you need to cut your losses once, say, this price candle ends up being drawn below the 200 EMA. That means this trend is not good. You need to cut your losses. This might happen, but over the in the net, that is, net means if you consider multiple trades or investment, you can see that the net profit is higher than the loss that will cut. So even if you like take a small loss, the chances, even if you take a small loss in few of the investments, if one of your investment like do not it follows the trend, then you can end up making a much higher profit that will cover all your losses. Okay, so idea is to reduce the amount you lose in your losses and increase the amount you earn in your profits. Okay, let's talk about this one. So this is one of the loss I was talking about. You can see the candle ended up being below the 200 EMA. This is the 200 EMA, and it ended up being below it. So once it is below this 200 EMA, you should immediately cut your losses. Otherwise, you would have been one of the investors who got stuck here and ended up losing so much money. Okay, now a few more things that will help prevent that also, because it's all about knowing things and how you can turn the signal, turn the what is that called, indicator in your favor. That is less losses and more profit. Ultimately, everyone has a chance of facing losses. You shouldn't be confident about that you will make profit. But what you can do is you can cut losses early, and you can decrease your probability of losses. Now, okay, another thing to note here is I'm just making it as, I'm just observing it as I go. I've not prepared this part yet. So what you can see is this EMA, there isn't always a chance of knowing, but what you can see is this exponential moving average, that is 200 EMA, has a much higher angle. If you see the angle it goes up in, it is much higher than, say, this one. Okay, so that way we can know that this one has a better chance of going up and continuing the trend than this one. Okay, plus just not the EMA, even the simple moving average, that is MA, this is also at a much higher angle, which is a big deal. So more simple moving averages don't really change the angle so sharply, because it is giving equal weightage to the old candles also, so it will not change sharply based on recent move. So if you see here, this angle is much lower, so you should be confident about the angle also. So there is a tool to measure the angle, but it doesn't really work because the chart can be expanded and reduced. So if I say do this, you can get the angle, that is 21. Generally more than 20 is okay, but you should be careful. For example, if you just placed it in a different scale, then the angle will appear much higher. So I guess you can do this auto. Once you've done this auto, then you can apply the scale, and as a rule of thumb, you can use more than 20. That way you can be confident that it is a good trend upward. Okay, and then you can also look for these, the way it is squeezing in. So that also means that the trend is there's a chance of trend reversal, but of course every squeeze is like a bounce of like spring or rubber, that will propel the stock higher. This is a true fact. This is like a true observation. So every squeeze is a good opportunity, so you have to like analyze whether it is a time to cut your losses or it is a chance of better profit. So how you can do that is, say there is no big resistance here, so there's a good chance that it would have gone up. But for example, here there is a resistance, it has not gone above it in long time, so it will face some resistance. So at this point, those who were investing from here should cut losses, cut like take profit or end the trade. There's no point waiting beyond it, because at this point it will face some resistance. If it crosses this, then again we can check whether the trend is continuing or not. But it is generally not advisable to pick up in the middle of a trend. Just look for another stock, because always pick up at this crossovers. Only then you will have the chance of making most profit. And remember the second thing, that is the angle, not a precise angle, because as you know, the scale of the graph might change in your system. So not a precise angle, but you should be confident about it. Generally, like this simple moving average, if it is taking a sharp turn, it is something that you can be confident about, because this simple moving average does not take like sharp cuts or turns. You can see it always, it's hardly ever more than like a 0 degree in a downtrend. And if it is more than this 0 degree, like confidently more than 0 degree, then of course the trend is going to be reversed. Yeah, so you might not get these many indicators, like yeah, so what you can do is you can cut this 20, I guess. Yeah, you can cut this 20. I think they will allow you only 3 in the free account, so you can cut ignore this 20. It will still be okay, I guess, but of course more the better. And this volume also you can use. It's not appearing. Okay, it's just gonna appear now. Okay, so you can use this volume also. So what you see in this volume is this volume line, or just in general the amount of volume at this part is high. Is a little higher than the surrounding, the previous stages. So that also is a good indication that more people are involved in, and this stock is getting popular. Okay, so that reduces the chances of fake breakouts like this. You can see in this case the volume is not high, so you should have a higher volume. That simply means that more trades are happening, and it is not a hoax, or it's not some operator or someone trying to manipulate the prices. It is being approved by multiple people. So that's the thing. This is in general a very safe way to trade, but of course, as you can see, you miss out on a lot of chances. For example, instead of buying here and selling here, if you had like bought here, then sold here, then again bought here, sold here, bought here, sold here, bought here, sold here, bought here, sold here, then in total you would have made a much higher profit, but also you would have increased the risk much more. And I doubt as a beginner you will be able to understand these trends well enough to like make profit and not make loss. So just don't go with this short-term trades like this for now. Just look for these. And one a simple way, yeah, so you can see many advisors like say that you can just follow this trend and follow that trend, but how will you know which stock currently is following, creating that trend, creating that pattern? There are thousands of stocks in total globally. How can you know that? So one simple way to know is like check the biggest winners of the day, biggest movement of the stocks. So once you can if you see uh, these stocks have made significant movement, and I'm sure they would have appeared in the biggest movers of the day chart. At least at the middle or the end, it would have definitely appeared. So just just look out for the biggest movers of the day for every day, and you can you can increase the probability of not missing out the charts which are creating patterns like this. First, it is important to have patience because it doesn't happen every day. You can see it only happened about in 2020. Yeah, but once you've gotten this, you can just invest your money and forget about it. And without working, you could have earned, like, say, if you had bought here, or maybe if someone is like new, I suggest them do not buy immediately after the breakout. Wait for the fallback retracement. This usually happens almost always. Okay, so wait for it. And if you had bought here, it is 88 rupees. Then maybe you could have sold here 68. And what is that? Almost 80 rupees more. That is like 100% more. If you're invested, it would have doubled. Yeah, but it would have taken some time. Is 2022, about a year, but 100% return in a year is a big deal, very big deal. Even banks give you like at most 5 to 6%. In India, at least, even in some countries, banks like take a reverse interest for keeping your money. So on that basis, it is a very big deal to get 100 rupee 100% profit. Okay guys, thank you very much for watching the video. Please hit the like button and subscribe to the channel if you're new. I'll be back with new videos and new help and guides from my programming community and fellow engineers. Thank you very much for watching. See you soon in the next video. Until then, goodbye, take care.